Did the right team win the Super Bowl? Hello traders everywhere, Adam Hewison here, president and founder of INO.com and co-founder of MarketClub with your market update for Monday the 4th of February. Well, the question is, did the right team win the Super Bowl? Well, if you're bullish on the general market, the answer has to be no. Because every time an AFC team wins the Super Bowl, the market only closes up about maybe 3%. Now, the opposite is true for the NFC. When they win, the market's up 11%. So if you're really super bullish on the market, then it's not really a good win for you. But here at MarketClub, we don't look at those things. We look at our trade triangles. That's what I'm going to show you this morning, or this afternoon rather. And we're looking at our trade triangles here. We're going to be covering all the major markets plus some new ones. Big movers today. You can see some of these markets are up down 5%, up 4%. So we're looking at those markets. But what I want to share with you, first of all, is how to use our trade triangles in futures and also in stocks. So here we are. The first one we have is the crude oil. You can see there's a little red daily triangle. So let's just name these triangles for what they are. So if we look at this one, this is right here. That's the daily. This is the weekly. And this is the monthly. Okay, so you can see that these two, the weekly and the monthly, are positive, meaning the longer term trend is still positive on crude oil, even though it's pulled back, a 1.5% today. The yellow highlighting the daily triangle, which is right here, indicated if you're a short-term trader, you should be out of this market. You should be basically exit this market today. You'd wait for a pullback, you wait for that week daily trade triangle to get green, and then you get back in. So let me just clear the screen and show you the rest. So what happens is when you have a situation where you have a weekly, well here like a weekly, a daily, a weekly, and a monthly, very strong trends. Now in the equity markets, all you want to look at, and I'll show you how this works, all you want to really look at in the equity markets is this. I'm going to go from the stock markets, from the S&P 500 all the way down. So starting here, and we'll start here, and so just don't even look at these things right here. This is not what you want to look at in terms of the markets. You want to look at the weekly right here and the monthly. So the monthly for trend, this is the trend right here. Okay, and the other one is for timing. Okay, so the reality is you are bullish even with today's pullback. You are still bullish on the stock market despite the pullback. I think it was because of the Ravens win. And even though I'm based here in Maryland, doesn't necessarily mean to say that we're going to take sides with the Ravens. This is money, and this is more important. So let's look at the other markets going down. You can see we have a mixed trend here. The monthly's up, meaning the longer-term trend is up, but the interim timing trend is down, and that's First Solar. So you really want to be out of this market at the moment. Now here's another one right here, and this is GameStop. Now that when you see a weekly trade triangle turn green and the monthly is already green, that's a buy. This is a buy today. Okay. Now when you see a yellow and a green here mixed, it means exit the position and wait for a better chance to get out. So you basically, the trend is up, but you really want to wait and see what happens with this market right here. And that is, if it turns green, the weekly, then you want to be a buyer. And let's just give that some room to grow on that one. So again, the two key levels so for stocks, you want to say the weekly is timing. And you can see the weekly right here. This middle row here is all weekly, okay? The other row here is monthly. And that's for the trend, okay? Very, very important. This is a very basic concept for us, but it works extremely well for Market Club members around the world. Just follow these trends and you will make money. I'm very confident of saying that. So let's just get right to it. Let's clear the screen, go to our first market. That's going to be the crude oil market. And we'll be analyzing that with some thoughts and ideas that can help you. So here we are. This is the crude oil market. And we are looking at the March, which is soon to go off the board. But you can see the pullback today. And if we put our daily triangle, you see it's right there on the top, 96.51. You actually got in here at 96.68, so you got a small loss. You took a $170 loss on one contract. But we're getting now down from a very overbought situation. You see we're very overbought here. And we're pulling back to what I think is going to be a very important low and buying opportunity. And let me just show you how that works. If you look at the most recent lows back here and back here, I think we're coming into a period where we'll come down. This is going to take a few days to strengthen up, but I think we're seeing a pullback to the midpoint of the downtrend trade channel, and then I think we'll see a regroup, and then we'll start going back up because you have the monthly and the weekly. Certainly the weekly is the key level here for the trend. You're just waiting for this daily to turn green, and when that does, you want to be a buyer of crude oil. So we'll watch that very carefully. So let me go on to the next market now. Got a lot of markets to cover today. This is gold. Now the big thing I see in gold here is the fact we do have a weekly and our daily positive. So basically saying you want to be a long this market because we use the weekly for trend and the daily for timing. Unlike stocks, this is a commodity, okay? So you want to look at that. The other thing I see here, I'm going to take this off and I want to put a very simple line chart on, and I'm going to dip my trend line indicator right here. So you just click on this line, you see a little yellow box here. Click here, drag it down, and you can see this is going to be very, very important. This happened to the crude oil market, and when it broke out, it really started to accelerate. So here you are. You have a classic trend line. We've talked about this in our traders whiteboard. You get the three parts right here. Now you're trading currently around 1675. If we see a close over this level, then you've broken this trend line that goes all the way back to October of last year. So you can see several months, about 5 months, 6 months, and if we break through that trend line, then we're going to take a shot to the next major resistance level, which in this case is 1700. If we break over that, then I think we'll see this market really begin to gather some momentum. I think it's going to take a little while longer, though. Let's watch it very carefully. Watch that trend line. We're covering that every single week. So let's go to our next market. And next market is the Eurodollar. And as you said, we were very bullish on the Eurodollar. I'm going to put our candlestick charts on and take obviously our trend line chart. Very bullish on, even though it's pulled back today, the trend is still very much in a positive phase. You can see if we just put our monthlies on, you can see everything is looking good here. A little bit negative on the daily, the very, very short term, but longer term, still looking very positive on this market. This is the S&P 500 cash. Obviously, a lot of pullback today, just trading below the 1500 level. We're looking for this market to go to 1550 to 1600. We've talked about this quite some time. This is the first time we've seen some sort of pullback, and we may see a pullback to the 1480 level, which is about the midpoint of the downtrend trade channel. But I think we're generally looking at this market to be a buyer because our monthly trade triangles from 1470 are still very positive on the S&P 500. Moving right along to the Dow, pretty much the same picture there. We have a plus market on the upside, and we expect the Dow to improve, even though we closed over the, let me just get this coming up. Even though we closed very, very well last week, we're seeing some profit taking today, and I think some of that could just be because of the AFC win, the Ravens again. So let me just go back here. Let's put this up this way. Okay, let's just refresh that page. Okay, let's just put the stock in here and see if it's taking that, because it was, all right. Tell you what, let's just go to, anyway, the Dow and the NASDAQ are pretty much the same there, and let's just go to our next market. I'm going to look at this. Okay, We are having some technical difficulties, but hang with me for a little while. We'll get them sorted out. We'll get on to the next market. So. Okay, well, looking at this, I'm going to go back to my portfolio manager. Let me just close this up. And we are temporarily unavailable, at least on that. But look at the things you want to look at with the trade triangles. Is really it helps you analyze the markets in a very, very positive fashion. And that's the key thing I want to take home from this message today. Is looking at the trade triangles keeps you on the straight and narrow, and also on the profit situation. Here we're back now. So let's take a look at the NASDAQ. We've talked about that. It's pretty much the same there. It's, even though it's down today. Remember we talked about being short NASDAQ and long the S&P 500. Still working out. We picked up 1/3% today, even though the market's down, because you're long the S&P, it's only down 0.93%, and you're short the NASDAQ, it's down 1.21%. Probably Apple's taking a hit today. But looking at Humana, we have all of our trade triangles green. And let's go right to that chart now and analyze this market, what we think is going to happen here. And again, it's all about using our trade triangles. I'm going to you can see the trade triangles came in right here. And the weekly, remember we talked about the weekly getting short, getting out of the market, not going short against the trend, but getting out of the market and trading with the general trend. So here's the last buy signal we had on this stock. It's here 70.09 right here on the 14th of January, and it's 78 now. So we picked up 10% really quickly in a very short period of time, in about 2 or 3 weeks. So pretty nice trade, big move up, but the trade triangles picked it up before probably anybody else. So moving right along to our next First Solar. Now the key thing is always to look at the trade triangles. If you see what they're doing, it can tell you very quickly what stock is doing and how you should be positioned in that market. And let me just go back to here, and you can see First Solar basically daily, weekly negative. You really don't, even though the market's up today 1.23%, you really don't want to be long this stock, because you have these two negatives right here. Longer term, it looks like it wants to go higher from 1948. That was the last buy signal we had on the monthlies, but we're currently trading at 28, so that's worked out very, very well. But looking at the next stock, we're looking at the GameStop, and this is where we actually did see a buy. Actually, excuse me, let me get this right. Yeah, the next stock is GameStop right here, and we had a buy signal today at 24.81. The market's currently trading at 25.40, so we got about 60 cents in that stock, looking good. Definitely the time to get in was today, and we think this is going to go higher. Now, the other stocks we're looking at is the trend is up, except for Tiffany. The trend is down there. Now, we do have a weekly trade triangle that's green. We need that to turn red to get very, very negative on Tiffany. Now, you see it's 60.34 on Tiffany. It's 62.43 right now, so pretty much where it is, where the signal came in, but we're waiting for a confirmation of the weekly to turn red. That will be a sell short or a total exit signal in this position. You should be out of this market right now anyway. So looking at Facebook, Facebook had a weekly today, 28.74. That indicates the market's 28.36. So that indicates that we are, in a trending, choppy trading type range. So let's take a look at Facebook if we can right now and see what we want to do with this stock. Just wait for this to come up. And while we're waiting, Facebook, basically the longer term trend is positive and the shorter term trend is somewhat suspect. So here we are, a lot of pressure today in this market, but you're getting down towards the lower end of the range. You can see this is where the previous support was. Let's just put a close only chart in here. And you can see right around this 28 level, I think we're going to find good support for this particular market. And again, I think cycle-wise, I think we're very close, maybe within a few days, of making a pretty important low. So again, look at our trade triangles at 28.74. That was an exit signal, and it looks to us that this could be an opportunity to look to see the market that's now oversold, like it was oversold here. And this is the key thing, is like sometimes you can get some great opportunities, and that is coming down here, so just draw that in. So coming down here, we're getting into the same oversold condition at the lower end of the Donchian trade channel, which should provide some support. So let's watch that market very closely. Hey, we've covered a lot of stocks. We've had some challenges technically today, but I'll be back tomorrow with some other stocks to look at. But always remember to take a look at those trade triangles, because they really do help you figure out. Look at how they just show you very visually where you should be in the markets. Hey, I'm Adam Hewison from MarketClub and INO.com. I'll be back tomorrow. Have a great trading day.